This is Barry Zalma speaking for Claim School Incorporated's blog, Zalma on Insurance. Today we're going to speak about insurance fraud and the automobile, and what to do when faced with automobile insurance fraud. To a person intent on perpetrating an insurance fraud, two maxims become immediately clear. 1. Insurers don't care. And 2, most adjusters and investigators wouldn't know a fraud if it presented itself to them with a sign saying, "I am a fraud." Very successful multi-million-dollar businesses have been set up with those maxims in mind. The most successful is the automobile personal injury fraud. It exists almost every metropolitan community. Each perpetrator of an automobile personal injury fraud varies the methodology slightly. Rather than isolated instances of fraud, they are run like a large corporate entity. The following are the categories of individuals involved in the automobile personal injury fraud ring, and it starts with the recruiter. This is a person who works in the community to recruit two different types of people, the victims and the insureds. They recruit victims from the ranks of the unemployed, individuals on welfare, or anyone in need of quick cash. The same sources provide insureds who may even include wealthy or well-off people who need cash to support their purchase of illicit drugs. The recruiting techniques are simple and straightforward. A victim is offered $300 to $500 cash to allow his name to be used in a report of an automobile accident. Sometimes they must actually sit in a car that is then struck by one of the recruited insureds. Sometimes they only sell the use of their names. In fact, depending on the insurer involved and the reputation it has for investigation of such claims, living persons are not necessary to play the role of victims. In such situations, the insured merely runs his vehicle into a stationary object such as a garage wall or a telephone pole to create damage to his vehicle. He reports that he struck the victim's vehicle in a private parking lot and that the victim and 4 of his passengers are reporting personal injuries. All of the victims hire counsel, usually the same counsel. Almost always the victims hire the same physician or chiropractor. Then there is the dishonest lawyer. Depending on his experience, the lawyer either recruits the recruiter or is recruited by the recruiter. The recruiters usually match the results of the bar examination and then make contact with a newly admitted lawyer. They advise the lawyer that for a small share of the proceeds, they can provide him with 10 to 20 new personal injury plaintiff cases every month. They claim that they have this source of business because they work as an administrator for a local chiropractic clinic or in a body shop. The young, gullible lawyer, either not realizing that it is a crime to pay a person for a case, or is so hungry for work that he or she ignores the law, agrees. The young lawyer never meets his or her alleged client. He or she gets contingency fee agreements from the recruiter and medical reports reflecting the injuries. He then makes demand on the insurer, who has already received a report from its insured, who of course was paid to report the loss to his insurer, advising that the accident was the insured's fault. The lawyer makes demands on the insurer for settlement, and after a few telephone calls and copies of the medical reports, he settles with the insurer for between $5,000 and $10,000 a plaintiff. The lawyer keeps all of the money less the fees of the recruiter, the victim, and the insured. The lawyer makes an excellent living, earning more money than he ever would on salary for any law firm. He learns the trade and recruits his own recruiters to keep more of the money. Now, unfortunately for these young lawyers, greed takes over, and the dishonest lawyer is caught. For example, the people involved in a stage automobile accident claims are usually successful until they get greedy. For example, in 2011, Robert Belshaw, 56, a Marina del Rey, California attorney, was sentenced to 7 years and 8 months in prison for his role in an auto insurance fraud ring that stole about $3 million from the insurance industry. Belshaw was found guilty in March of 5 counts of money laundering and 3 counts of state income tax evasion. A co-defendant and ringleader, Solomon Morris Davis, 61, of Rancho Palos Verdes, also was convicted on 20 counts of insurance fraud and conspiracy. He was sentenced in April to 12 years in state prison. The ring staged accidents to defraud insurance companies all over the state of California. Prosecutors told the press that Davis set up a company called Total Medical Health Care in the Mid-Wilshire area of Los Angeles under the name of his wife, Dr. Jody Hunter Davis, as part of the scam. She, however, did not practice medicine at the clinic and was not a suspect in the case because she knew nothing about it. As part of the fraud scheme, the signatures of doctors who worked part-time at the clinic were forged for inflated billings. Davis recruited Belshaw to run a scam law practice that negotiated the fraudulent billings with insurance companies from September of 1999 to April of 2003. Belshaw failed to claim any of his earnings on state income tax returns from 1999 to 2001, and officials with the State Franchise Tax Board were part of the prosecution. Belshaw now owes the tax board more than $31,600 in unpaid taxes, penalties, interest, and the cost of investigation. A restitution hearing was scheduled, and Mr. Belshaw was ordered to pay. Had Mr. Belshaw limited the number and extent of fraudulent claims, he would probably still be presenting fraudulent claims and earning a good living. Because he got greedy, because he failed to report the money he earned from his criminal activity to the Franchise Tax Board, he is now residing in the Gray Bar Hotel, operated by the state of California, and can only wear an orange jumpsuit. This post was adapted from my book, Insurance Fraud Cost Everyone, which is available as a Kindle book or a paperback from Amazon.com. Please tell your friends and colleagues about this blog and the videos, and let them also subscribe. And you can subscribe to the blog by simply clicking on the URL zelma.com/blog, and you'll receive notice probably 5 times a week, sometimes 6, of new blog postings. The videos and the blog are free, and you can subscribe at YouTube and or at rumble.com. And if you do, I'd appreciate a click on the like button or the thumbs up button at rumble.com. If you're really interested in insurance law, insurance fraud, and insurance claims, please consider subscribing for a very small fee to my Substack publications or my locals community. Thank you for your attention.